Hello, friend. This is Kishori Sharan. Once again, I am back. Welcome to my YouTube channel. So, today we are here to discuss everything about APR filing, right? So, APR is a filing which is being governed by FEMA. So, we will discuss today the basic concept, why APR is required, who all are required to file the APR, what is the due date, and consequences of not filing the APR, and other related stuff. So, let us begin. So first question is, what is an APR? So APR stands for Annual Performance Report, which is being filed under FEMA Act 1999. And all the persons or the Indian businesses and the resident individuals who have made overseas direct investment abroad are required to file this performance report within by 31st December every year within the to the AD bank, right? So AD bank is the bank which is being designated or appointed by RBI, who is authorized to deal in the foreign exchange business. So now question arises that why RBI mandated us to file this APR. So by filing this APR, RBI tracks the overseas joint venture and wholly owned subsidiaries financial health. So by financial health means that RBI just keeping a track that the money which we as an individual or the resident individuals or the resident companies have sent abroad in financial terms, what is the performance of that money, whether it is earning money for India as a whole or not. So this is a basic concept that through APR, RBI is just tracking the financial health of the investment made by the Indian residents abroad. And another point is that it has to be filed by 31st December every year, and missing it can lead to the penalties, which may be in the form of financial and other blocked or other operational blockages. So we will discuss those in the forthcoming slides. Now, moving on to the next slide, the next question is that who is required to file the APR or who must file the APR? So, broadly, there are four categories who are required to file the APR. So, we will just cover the categories one by one. One is the Indian companies, second one is the LLPs and the partnerships, the third one is the resident individuals, and fourth is the non-operational entities, right? So, I'll just give you a summary that why they are being required. So, all the companies are private or public, whether any private company or public company who has a wholly owned subsidiary abroad, like he has to file an APR in the prescribed format. All the LLPs and partnerships and resident individuals who has invested through ODI route overseas, then they are required to file the APR. And I must emphasize here that APR has to be filed in the prescribed format, and it should capture all the details which are there in the APR. So I'll just discuss the components of the APR in the forthcoming slides also. Now here one question or one point which I want to emphasize that let us suppose a situation wherein there are in a subsidiary there are four shareholders, and every shareholder is holding 25% of that particular wholly owned subsidiary. Now the question arises that who is required to file the APR? So logically the answer to this question, if you think logical, then answer is that the every person who is holding a stake is required to file an APR, but practical this is not possible. So RBI has issued a fax in this particular case and said that the investor with the highest percentage can file the APR, right? And in our example, when the stakes are equal, then one investor must be mutually designated to file the APR, right? So in a nutshell, when the stake of a particular wholly owned subsidiary entity is being held by two or more shareholders, then the person holding the highest stake can file the APR. And when the stakes are equal, then any person or any one investor can mutually be designated to file the APR, right? I hope this is clear. So now moving on to the next point, that who all are not required to file the APR. So there may be situations that a person is having an investment in wholly owned subsidiary outside India, but he is holding less than 10% of equity and no control, then he is not required to file the APR. Second is the foreign entities, that is the subsidiaries of Indian companies abroad, are under liquidation, then the regular APR is not required. Rather, companies or the Indian entities are required to file a discontinuation form or the discontinuation filing requirements, which is a separate topic, right? So rather than filing a regular APR, they are required to file a discontinuation filing APR. That is a separate form altogether. Now, when The third situation is when a complete exit during the year. Then in that case, regular repair is not required. Then company is required to file a form FC rather than full APR, right? So these are the three conditions under which APR filing is not required. Now, moving on to the next question, that is step by step APR filing process. So in this slide, I have just tried to cover the whole process of filing the APR into 5 steps. So the first step is we have to gather the general requirements. The general requirements could be in the form of uh, see, if you see the APR form, then the first and foremost point is that we have to mention the 13-digit RBI UIN number. UIN stands for Unique Identification Number. Unique Identification Number is a unique number which has been issued by RBI to each and every foreign entity. So before filing an APR, we have to mention that particular unique identification number on the APR so that RBI can track this APR related to this particular entity. And also, we have to gather the audited financial statements, the FIRCs, the bank advisors, and all other related documents. So I'm just trying to explain what all the data and the papers that is required to file the APR. So first is the general requirements that I have discussed. Now moving on to the second point, that is the print and prepare the form ODI. So ODI is the format which RBI has prescribed to file the journal and the specific information related to that particular APR. So all these information which is being requested in that particular form has to be filled. So the sections can broadly be categorized in the four categories rather, that is the capital structure, the shareholding pattern, the financial performance, and the repatriation dues. Now, after filling all the information as mentioned, namely 4 or 5 sections, then we have to obtain the signatures of the authorized signatories from on the APR. So this APR has to be signed by the authorized signatory from the company and also the statutory auditors of the Indian entity, because this APR is being filed of the wholly owned subsidiary by the Indian entity to the AD bank, specifying the performance or the financial performance of the foreign entity. So it has to be signed by the authorized signatory of Indian entity, that is the parent company, and the statutory auditor of the Indian company, right? Now, after the signatures for APR, we have to submit to the AD bank, that is authorized dealer bank, and also we have to retain the acknowledgement, because retainment of acknowledgement is one of the important point, because as you know, our government system, it may be possible that later on the RBI may come that you have not filed the APR. Then at that point in time, the acknowledgement will serve as a proof that you have submitted the APR well within time, right? So this is the step by step, a very basic step and very easy steps. But yes, this I have just tried to summarize all the steps which are required to file the APR. Now, moving on to the next question, that when are the audit financials mandatory? So the here the question is that the audit financials of subsidiary, that is a wholly owned subsidiary which is outside India, right? So in that case, the key rule which we have to remember every time is that if an investor or the Indian investor has control, then audit financials are mandatory. Even if the host country doesn't mandate it or is not required the audit financials, even then the audit financials are required for purpose of filing the APR, right? So the golden rule is that only when the Indian entity has a control over the wholly owned subsidiary. So now coming on to the scenario, so I have just tried to create 2 scenarios. Scenario A, audit mandatory. So control exists or host law requires. As I mentioned, if control exists and host law requires, then audited financial statements of subsidiary or the foreign entity is required for the purpose of filing APR. Now, scenario B, where audit is not required. That means whenever there is no control and also the host country laws, that is the foreign country laws, doesn't require or that particular company to get the accounts audited. In that case, audit is not required, right? So I hope this is clear that when audit financials are necessary for the whole owned subsidiary. So the golden rule is that when Indian entity has control, then audit is required, even if host country law doesn't require. And if there's no control, then audit is not required, right? So this is the golden rule that we have to remember every time. So now moving on to the next slide. In this next slide, I'm just trying to give you a brief or flavor of what is the various components on the sections wherein the information which needs to be captured, which needs to be filled in the APR, right? First is the capital structure and the shareholding. So in this particular section, we have to record the complete equity capital, the percentage of the Indian entity in the foreign partners. That means the shareholding of the foreign entity which is being held by the Indian entity. It may be 100% or less than 100%, whatever. So we have to specify that too in the terms of number of shares and the amount also. And we have to make sure that the amount which has to be mentioned are there in the foreign entity's currency, right? It is not in USD, it should be in the local currency of the foreign entity. For example, if the entity that we are talking of is a Dubai entity, then all the figures that has to be mentioned in the APR is that of AED, that is the dollar dirhams, that is Dubai dirhams, right? So moving on to the next section, that is the final performance, financial performance. So we have to provide here the 2-year comparative data. That is the net profit and loss account, the turnover, the revenue, the foreign currency, actual foreign currency, that is what, and the net worth of the that particular foreign entity. And the third section is the repatriation of the dues. Repatriation of the dues means the amount which is being sent by the foreign entity to the Indian entity. And the repatriation may be in the form of dividends, royalties, technical fees, consultancy fees, etc. So all these amounts has to be mentioned in that particular APR along with the FIRCs. So we have to attach the FIRCs also for any repatriation to be done. And also the last section, or probably the last point, is that once AD Bank verify all the entries against the supported documents, accuracy is not negotiable. That is, we have to be very sure, and we have to be doubly sure that all the information that we are providing here is 100% accurate. Accuracy is not negotiable. It means that we can't afford to have the mistake in this particular filing, right? So we have to be sure that all the figures, data that we are providing in this particular annual performance report should be correct, right? So moving on to the next slide is, what are the consequences if we miss the deadline to file the APR? As mentioned, the deadline for filing the APR is 31st December every year, right? So we have to file the APR by the 31st December. And if we miss that deadline, then rupees 7,500 as a penalty has to be paid by the company as a penalty for the delayed filing of the return. See, you have to file the return in any case. If you cross the 31st December, then you have to pay 7,500 as a penalty for not filing the APR within time. And if we continue to do that delay, then penalty can up to 300% of the investment value. So you can appreciate that how critical and how important is this deadline, and because it involves a huge financial commitment from the sides of the company in the form of high monetary penalties. So we have to be sure that we have to file the APR well within time. And also, apart from the monetary penalties, there are certain operational blocks also. Operational blocks in the form is that ADI AD Bank can restrict the new ODI remittances and flag account internally as a red until the entire backlog is cleared. That means as a business, you won't be able to do your regular business stuff. That will in turn affect regular business operations. So we have to be very sure that we will be in particular in filing the APR well within time, right? So moving on to the next slide, or rather, not the slide. So this is my discussion about the APR. I hope I am adding a value to that, and it will help in your day-to-day businesses. If you are dealing with the foreign entities and you are dealing with the wholly subsidiaries, so I hope you can now understand how critical the APR is. So I request you can just like, subscribe my channel, and if you have any questions or clarifications, you can just comment. You can just mention those in comment section. I'll try to definitely answer those questions. Thank you. Thanks again for watching. Thanks.